Good morning, dear students. To sum up the chapter, we are here to recapitulate a few concepts and the keywords. You can see on the screen two different words is given there: accounting standard and generally accepted accounting principles. In short, it is known as GAAP. So, what is accounting standard? Accounting standard is a set of rules that is issued by Institute of Chartered Accountants of India. I told you previously that it is the regulatory body that implement that create different types of rules, principles regarding organization that are required to follow these kind of things. Gap is some thing more, you can say same thing, but it is general guidelines. It is not issued by ICAI. So it simply explains that how a business enterprise can record its transactions, and these are also called principles, concepts, conventions, assumptions, etc. In some of the book you will find it as a synonyms in modern book now of latest publication. Otherwise, AS is issued specifically from ICI. Okay. Now here these concepts, the whole world of accounting, recording accounting is based on these concepts. Business entity. I told you earlier, according to this concept, business is totally separate from its owner, its proprietor, and we record the transactions of business in the books of business only, and it is treated as separate entity. For example, Mr. Ram has purchased a television for his home, and by mistake the accountant has recorded in the books of business. Whether the accountant is correct or not, then the answer is no, he is not correct, because the accountant of Mr. Ram has did a mistake. He has not taken business separately and personal property of the owner separately. Okay. Now, money measurement concept. If you could remember that every transaction should be measured in terms of money. If it is not possible to measure the transactions, measure the event in terms of money, that is economic event, then there is no place in accounts. Going concern means, yes, going concern. Business will go for either and either. Okay. So it is normal intention, objective, a thought in the mind of the businessman that his business will never end. Okay. Accounting period. What is accounting period? The period for which accounting is going to be recorded. Normally it is of 12 months. Okay. Cost concept. What is cost? According to this concept, the asset, fixed asset that has been acquired or purchased in the business should be recorded on the cost, and it includes transportation cost, installation cost, erection cost, etc. Isn't it? It will not recorded on purchase price only. Okay. I have given you example in my previous videos as well. For example, you have purchased a car. Your parent has purchased a car, and the cost of car is suppose 10 lakh rupees. Further, 2 more lakh has expended for accessories, etc. Then the total cost of car should be taken as 12,000 instead of 10,000. Sorry, should be taken as 12 lakh instead of 10 lakh. Now come to dual aspect concept. What is that? According to this concept, every transaction, economic event should have twofold in accounts, and it is going to equally affect asset as well as liabilities plus capital. Every transactions when we will start increase, we will learn on this. This is very important. Okay, revenue recognition. What does it mean? It means that only assumed revenue should not be recorded. Revenue should only be recorded when right to receive or revenue has already been received. Isn't it? Okay. Yes, you can take an example of that. Suppose you have started a new business and you have invested 10 lakh rupees. You have purchased goods for 2 lakh, and if you will sell the goods of 1 lakh for 1 lakh 25,000, then you will earn 25,000, isn't it? But merely thinking of that cannot be recognized in terms of revenue. Suppose you have sold that goods for 1 lakh 25,000, although the amount has not been received, but 1 lakh 25,000 will be there. Okay, 25,000 will be profit, 1 lakh 25,000 will be revenue. So revenue will only be recognized when it has received or right to receive is there. Matching concept. Expenses should properly be matched with the relevant revenue. For a relevant revenue here to say means expense of a particular year should only be matched with the revenue of that particular year. Okay, no other year should involve there. Full disclosure. Whatever the assumptions, because there are various assumptions when you will prepare accounting, whatever the assumptions, information that has adopted should properly be disclosed while preparing accounts, either footnote or in accounts. Consistency means we can say equality, Consistency means whenever any method has been adopted for calculation of depreciation, provision, etc., it cannot be changed during the year or a coming year. It can only be changed if the principle of accounting allows that, or principle of accounting allows and it is profitable for the business. Okay, conservatism, very important thing. According to this concept, what does it mean? All the future loss should be recognized, but not the future profit. And this is also known as prudence basis. Thereafter, materiality concept. It shows that if a transaction that is going to affect, that has important effect over the financial information, then it should properly be recorded. It should be, the effect of that should be taken into account. It should not be ignored. So a student, while preparing accounts, few things uh, should always be keeping, although all the concepts are very important, but few concepts like business entity concept, cost concept, dual aspect concept, consistency concept, conservatism concept. These are very important. Every time you will face these kind of concepts while you are recording transaction for the enterprise. Keep revising the things. Till then, goodbye.